welcome to the accounting lesson. Your host here is Mr. Thapelo Pako Johani. So today we are going to do the introduction to accounting. Well, firstly, let's start with the definition of terms. We're going to look at accounting, bookkeeping, assets, liabilities, as well as capital. So what do we mean by accounting? Accounting means the recording, analyzing, summarizing, classifying of important financial information. Bookkeeping means recording of important financial information. So how do we differentiate between accounting and bookkeeping? Bookkeeping only deals with the recording of important financial information, whereas accounting deals with summarizing, analyzing, recording of important financial information. What do we mean by assets? Assets are items of value owned by the business. There are types of assets. We have current assets and non-current assets. Current assets are items of value owned by the business and have a short lifespan, whereas non-current assets are items of value that have a long lifespan. I am going to give you examples of current assets. Current assets include inventory, cash in hand, cash at bank. And non-current assets here, we're talking about motor vehicles, office equipment, fixtures and fittings. Those are examples of non-current assets. And then what are liabilities? Liabilities are the debts of the business. Under liabilities, we have both current liabilities and long-term liabilities. Current liabilities are those debts of the business that are payable for a long period of time, whereas long-term liabilities those debts of the business that are payable for a long period of time, and for current liabilities they are payable for a short period of time, I may say. Examples of current liabilities are creditors, but examples of long-term liabilities are a loan that lasts more than 2 years. What is capital? When we're talking about capital, we're talking about money or resources that is used to start up the business. Basically, I'm trying to give you a scope on accounting, what is exactly happening in the business. So all those are components of accounting. I want us to tackle the accounting equation. The basic accounting equation says assets equals to capital plus liabilities. So if you are smart enough, you can change that to the subject of the formula, that is trying to find or solve for capital or trying to solve for liabilities. Well, now because assets equals to capital plus liabilities, that means that capital equals to assets minus liabilities, and then liabilities equals to assets minus capital. How do all these three components behave? Well, we have what we call the debit side and the credit side in accounting. We have these three components: assets, we have capital, we have liabilities. You can see these signs. This plus sign is represent to increase, but this minus sign represents to decrease. Assets. When assets increase, we debit them in their account. But when they decrease, we credit them in their account. Capital always increases on the credit side, but it also decreases on the debit side. Remember the accounting principle. When you debit, you credit. When you credit, you debit. Liabilities increase on the credit side, but they decrease on the debit side. That is why I'm saying you debit, you credit, you credit, you debit. So basically that is the introduction to accounting. But do not forget the types of organizations that we have. Well, the first organizations that we have sole traders. Sole trader is somebody who operates business individually. They only use their name. That is referred to as a sole trader. We also have partnership. Partnership is ran by two or more, or that is to say more than two, but the maximum number, forgive my French, is 20 to run that particular business. Well, that is all I had for you under introduction of accounting. See you next time. Enjoy your day.